Christina, thanks. Christina Partsinevelos. Let's get back to Paul Hickey now. So we have some numbers out, and you're saying that there's probably a lot of deleveraging still to happen on this chip trade. I mean, that was what really pushed it in Korea. This massive build of leverage, households in it, a belief that there was some sort of state-backed policy, and that ended up to be just sort of crumbling away at this point.
Yeah, so I mean, I think on Seagate, I was saying we're probably closer to the end of this, but Seagate's reaction today to earnings is actually sort of positive, unlike the other chip names. But I think that those forward numbers were phenomenal. The guide, the low end was guided above the prior high end of guidance. The commercial business is doing great. So I think the forward numbers are a good indication of the overall economic strength that we're seeing in the U.S. economy. And, I think that's a good sign overall. And it's for the broadening out trade, other sectors of the market doing well.
Question, I guess, is that broadening out trade, and we constantly talk about this, is it really just kind of a stopgap, kind of offset when the leadership parts of this market need a rest or get a break or come under a lot of doubt?
Yes, but it would be a lot worse if everything was falling apart. So it's great that we've seen some passing of the baton. But now, and so far this year, you've seen the 4 largest stocks in the S&P 500. They now have market multiples after the recent pullback. So you've seen these valuations come in. So I think we made a big deal of Google or Alphabet earnings last week. Stock reacted negatively. But as you were saying in the intro, this week the stock has rebounded. So we place so much focus on these individual mega cap companies and how do they react to their earnings on the day? And that's going to be a bellwether for how the market performs during the earnings season. But if you look back historically, you're better off flipping a coin as far as how those stocks react on the day after they report to how earnings season is going to be.
Yeah, you're spoiling the fun, but I've said that for a very long time, that there's not any kind of magic bell cow stock that we have to follow.
Well, there's plenty of other stocks that have a higher correlation, but they're not the mega caps.
On the other hand, just on that point, Apple often viewed incorrectly as a broad market bellwether.
Right.
However, it's really been a beneficiary of everything else going on, and now that looks like a richly valued stock.
Yeah, so that's trading over 30 times earnings. Of the 5 largest companies, that's the one that's, the massive, if you look at a chart of their valuations versus the S&P, it's, everyone's here and then Apple's way up here.
Yeah.
So as Apple, what's good for Apple hasn't been good for the overall market. And that's been for years now, going back to early iPhone models.
And what's been good for NVIDIA hasn't been good for NVIDIA.
Right.
I mean, the opposite side of it is that Apple's so richly valued and NVIDIA is below market multiple at this point, which is fascinating considering, this is the epicenter of the AI trade.
I know, it's phenomenal. AI was supposed to make us all smarter but, the uncertainty regarding how AI is going to play out is greater than anything we've seen. You brought up NVIDIA, Melissa. You look at a stock like Oracle, the swings in that stock over the last year have been crazy. Just in the last 70 trading days, it has seen one of its largest ever 35-day rallies. And then immediately after that spike, it saw one of its largest 35-day declines. So the market doesn't know what to make of it. And you see that in all areas. In Iran, there's so much uncertainty. With the Fed, we've never seen this level of uncertainty going into a Fed meeting as we're seeing.
Yeah, right. On the day before.